Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Bitcoin is potentially coming in for another test of this massive line of resistance. While in the short term, Bitcoin is right now playing out a bear trap, which I'll talk about in just a moment, while more liquidity is building above the current price of Bitcoin, pointing towards potential short squeezes coming soon. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, starting off on the weekly Bitcoin chart, and right now the price of Bitcoin is still in a larger bull market on the larger timeframes. So over the last one day, not a lot has changed on this weekly time frame. And if we're taking a look at this weekly Bitcoin chart, right now the weekly Bitcoin MACD is still sitting in the green, so still looking bullish, but of course we're starting to lose some bullish momentum just here over the last 1 week or so. And the last time we started to lose some bullish momentum in this indicator just after a major bullish crossover, that happened pretty much exactly 1 year ago in the first half of December, and the bullish crossover occurred during October. So very similar what we're seeing right now to what we saw last year. And so first of all, last year, once again, we saw that bullish crossover in October, and then we saw a bull run for the next few months or so until around the first half of December. Early December is where that bull run started to slow down just a little bit in the short term. And then for the rest of December and even entering into January, we actually basically saw a pause during the larger bull run with a lot of choppy sideways price action, just bouncing around sideways in the shorter term during the larger bull run. And if we're looking at the current day price action, once again, we're seeing something very similar where we saw that bullish crossover in the MACD indicator on the weekly time frame back in October, just like October 2023. And then we saw a huge bullish move over the next few months, just like last time, until around early December. And then just now we've started to slow down a little bit in the short term as we have lost a bit of bullish momentum, very similar to what we saw last time. And so if history keeps repeating like this, it's likely we're going to see a little bit more of a break during this larger bull run, maybe for the next few weeks or so, before ultimately continuing the bull run much higher later on. And so once again, as I've been saying over and over again here on the channel, on the larger timeframes, when we're zooming out, we're still looking very bullish when we're talking about the bull market. Just in the somewhat short term here, we're taking a bit of a break from that larger bull market. And if we're taking a look at this 4-day time frame, right now the super trend indicator is still sitting in the green, indicating a larger bullish market. And if we're zooming back out to the weekly time frame, right now the price of Bitcoin is bouncing a little bit in the short term, potentially coming back up for another retest of this massive Fibonacci extension level, sitting at around $102,000 per Bitcoin. So at around 102K, we have significant resistance, as we've obviously found recently at around 100,000 to 102,000. Expect strong resistance right there. And in case you're new to all of this, resistance is basically just where a lot of people are interested in selling Bitcoin or shorting Bitcoin. And so essentially think of a lot of selling pressure taking place at approximately 102,000. But due to the fact that Bitcoin is a scarce asset, obviously it has a strict limited supply. Due to that fact, of course, eventually we will run out of sellers at that price range right there, which means the more we test that line of resistance, if we keep coming back up, testing that level, seeing little rejections and then testing it again and again and again, ultimately that's going to buy up through all of those sellers. And ultimately, when we run out of sellers at that price range right there, if demand overruns the supply, then we'll push through that range known as a breakout and see much higher prices. And so in other words, the more we come back up and bounce and hit around 100,000 to 102,000, the more that happens, the more that weakens that level of resistance and the closer we get towards a major breakout. And in case you're wondering where I'll be targeting next beyond 102,000, once we can finally see that breakout, which right now has not happened, but once we see that confirmed breakout, ideally with a weekly candle close above 102K, then next I'll be looking at this 2618 Fibonacci extension level on the 3-day time frame, sitting at around $113,000 per Bitcoin. And so essentially we'll likely see a pretty quick $10,000 move towards the upside once we first see a breakout above this resistance, which right now, once again, is still acting as resistance. And if we're taking a look at the 12-hour time frame, technically speaking, this bearish divergence on the 12-hour Bitcoin chart is still currently active, with higher highs already confirmed in the price and lower highs already confirmed in the 12-hour Bitcoin RSI. And so as I've been saying over the last 1 week or so, this basically tells us that we're due to see a bit of a break from all of that bullish momentum here, and we're likely going to see either a bit of a pullback or at the very least some choppy sideways price action as the most likely outcomes from a bearish divergence. And as I've also been saying over the last few weeks, this is very, very similar to what we saw exactly 4 years ago, because exactly 4 years ago, that was a Bitcoin halving year. In fact, the most recent Bitcoin halving was this year in April 2024, and the Bitcoin halving before that was in May 2020. So 4 years ago, around November, December 2020, that was a Bitcoin halving year, just like this year, obviously. And if you know anything about the Bitcoin halvings and the 4-year halving cycles, that basically tells us that we should be at a similar stage in the market cycle right now, a similar stage in the bull market to what we were in back then at the same time of the year. And if we're looking at the exact same time frame, the 12-hour time frame, we're seeing the exact same signal play out, the bearish divergence on the 12-hour chart around a significant level on the price chart. This time it's the 100K level, last time it was the 20K level. And so once again, we're seeing very similar price action right now, very similar signals and everything play out to what we saw 4 years ago. So this is not very unusual price action. In fact, this is pretty much exactly what we saw 4 years ago during the bull market. And what came next was ultimately a major breakout into new all-time highs. But after we first saw a bit of a short-term cool-off, a bit of a break during the bull run. And if we're measuring out that move from when that bearish divergence confirmed back here around 4 years ago to that next low in the price, that was around 10 to 11 days later, so around 1.5 weeks worth of a pullback here. And then from that point until we eventually broke out to the upside, that was just over 2 weeks until the breakout. And now, obviously, it doesn't have to exactly perfectly repeat the exact amount of time this time around. But if we were to measure out, let's just say 1.5 weeks from this high right here, that would still be in a few days from now. Or if we're measuring out, say, 2 weeks or so from that high to eventually when we break out to the upside, let's just say that would put us at around the 20th of December, give or take, when we see that major breakout. Now, once again, it doesn't have to perfectly repeat. In fact, it's unlikely it will perfectly repeat to the exact day. But that's just to give you an idea of what happened last time and what is in the realm of possibilities and what could be likely this time around in the shorter term and the longer term. And so for now, while this bearish divergence is still active in the somewhat short term, just be patient. Of course, we're likely going to see a little bit more of a break during the larger bull market before ultimately we see that breakout at some point later on. And when we finally see that breakout into new all-time highs in the price of Bitcoin, personally, I'll be spending my crypto profits using my Bybit card, because yes, I have been actually using my Bybit card basically every single day. And that's a way how I actually spend crypto. So I don't have to actually cash out into a bank or anything like that. I simply just spend crypto through my Bybit account. It's so easy. And so, for example, if I just want to keep holding Bitcoin or just have some stable coins on my Bybit account, I simply just have it sitting in my Bybit funding account. And then the Bybit card, when I'm tapping that card to make purchases, it simply just uses crypto to make those purchases. And so personally, I am actually benefiting quite a lot from this Bybit card right now, because not only can I just use crypto to make purchases, I can actually get cash back using this card. And right now there's 100% cash back on Netflix, Spotify, Prime, ChatGPT, TradingView. So a bunch of things here fully rebated right here, 100% cash back. And then on top of that, there's a 2% cash back on all purchases if you're just a zero VIP. So if you're just making your Bybit account, 2% cash back on all purchases. But if you trade a lot on your Bybit account, or if you have a lot of funds on your Bybit account, that can raise your VIP level, which can raise the cashback amount. And that goes up to potentially a 10% cashback amount, 10% cashback on purchases if you're at those high VIP levels. But for all users, it starts off as 2% cashback, which is a pretty big deal. And by the way, that cashback is paid out in USDT straight back into my Bybit account. And yes, you can withdraw that USDT. And so personally, it's just a way to basically easily cash out and take a little bit of profits, for example, out of crypto and just buy things once again using this Bybit card. So I'll make sure to leave a link to that page right here, this page right here in the description down below and in the pinned comment. In fact, it'll be the first link below this video. It'll take you to this page right here where you can apply for the Bybit card if you want to. And now, of course, with Bybit offering products like this, for example, it is a KYC exchange, which means it's not available in every country in the world. But if you want to check it out to see if it's available in your country, once again, check it out. First link below this video, and you can see if it's available in your country right here. And also, if you use the link below this video to apply for your Bybit card, you can get a 30 USDT sign up bonus. So basically a free $30 to start spending on your Bybit card if you use the link below this video. But with that being said, taking a look at this Bitcoin chart on the 8-hour time frame, and right now we've possibly just seen a bear trap in the short term, because obviously over the last one day we did actually see a brief break to the downside below this ascending line of support, which was sitting at approximately $97,000 per Bitcoin. And then right now, obviously, we've come back up and we're starting to break out back above that line on the price chart. And so especially if this breakout actually confirms with this 8-hour candle close confirming back above around 97,500, then in that case, that would confirm this as a possible bear trap, basically a fake out to the downside, which are trapping some bears in short positions, for example. And bear traps like this, by the way, are actually quite common during bull markets, during larger Bitcoin bull markets, because during bull markets, the price overall on larger timeframes especially generally drifts towards the upside. And so that's why I say over and over again here on the channel, while the price is in a larger bull market, personally, I try to stay away from short positions and try to only look for long positions during a bull market. But then, of course, a larger bear market is the exact opposite. When we're in a larger bear market on the larger timeframes, like 2022, for example, during those periods in the market, of course, it's wiser to look for short positions over long positions, because during those periods in the market, of course, the short positions are making more money overall than the long positions. And also during bear markets, we see quite a lot of bull traps. So the opposite of a bear trap, where the price might see a little fake out to the upside and then a quick crash later on. But because Bitcoin is in a larger bull market right now, of course, we do see these little bear traps from time to time, these little fake outs to the downside before bouncing back up. So just be aware of those happening every now and again. And so we do actually have some short-term support at around 95,500 to 96,000 that we've just recently found. And if we're looking at the volume profile indicator, we're building more volume at around just underneath 96,000, acting as support. But we still have a gap in the volume profile indicator right here in between around 92,000 to 95,000. And so essentially the next major area of support to the downside is sitting in between 91,000 to 92,000 if we were to see a larger pullback here and start breaking below, say, 95 to 96,000. But for now, once again, we're most likely going to see a bit of choppy sideways price action here as a likely scenario in the short term, especially while this bearish divergence is still active on the 12-hour time frame while the price is within a larger bull market. And if we're taking a look at the Bitcoin liquidation heat map, right now we have more liquidity still building to the upside, because once again, these little pullbacks here in the short term tempt a lot of traders in opening short positions, as I talked about in my last few Bitcoin videos. So that helps to lower funding rates, which is good news for the longs out there and the longer term Bitcoin holders. And what else that does is, of course, add more liquidity to the upside, because when shorts open, that adds liquidation levels to the upside. So ultimately, if we head to the upside and break out above these levels on this chart right here, that liquidates short positions, which can cause a short squeeze, pushing the price much higher if we actually break out above those levels. And so we do have a small amount of liquidity right here at approximately 99,000, but most of the liquidity is sitting at approximately 102,000, and we have much more liquidity as well at around 104,000 to 105,000. And so once again, if we start breaking out above those levels on the price chart, that could possibly trigger a short squeeze, sending the price much higher. Just like how right here we actually saw a bit of a long squeeze. We saw liquidity below the price of Bitcoin back then just a couple of days ago. That was sitting at around 98,000 approximately. And then once we broke below that area on the price chart, we saw a quick dump that followed, because that was a long squeeze. That was liquidating long positions because we were going to the downside to downside liquidity. Whereas this time around, we have liquidity above the price. We're going to the upside. So if we break out above those levels, it would cause a short squeeze. And so definitely keep an eye out for those levels on the Bitcoin price chart. And if we're taking a quick look at the Bitcoin dominance on the weekly time frame, right now the Bitcoin dominance is still retesting this previous line of support to possibly flip it into new resistance. So as I explained in my last Bitcoin video just yesterday, this could be very bullish for the altcoin market if we see a strong rejection here, flipping previous support into new resistance. Because I want to make it clear, in case you're new to all of this is not the price of Bitcoin. This is the Bitcoin dominance chart. So essentially, essentially Bitcoin's market share. So right now it's at close to 57%, which means out of the overall crypto market, about 57% of the market cap belongs to Bitcoin. And so when the Bitcoin dominance crashes, that's not necessarily bad for the Bitcoin price. The Bitcoin price can still go to the upside, even if the Bitcoin dominance is going to the downside, because all that means when the Bitcoin dominance goes to the downside, that just means the altcoins are doing better than Bitcoin. The altcoins are gaining market share. And so that's also known as an altcoin season when we see a crash in the Bitcoin dominance. And over the last 1 month or so, that's exactly what we saw. We saw a mini altcoin season, but this could possibly turn into a much, much larger altcoin season in the coming months here if we see a major rejection from this level in the Bitcoin dominance. And so we could potentially make life-changing money in the next 6 to 12 months or so if this rejection confirms in the Bitcoin dominance. So you definitely have to be subscribed to this channel with notifications turned on so that you don't miss out on any of these important update videos. And if you want to actually take any of these trades in the price of any crypto, once again, check out the links below this video to those exchanges if you want to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.